Hey guys, welcome back to the channel. In today's video we're taking a look at the Q1 earnings report for Tesla and how that's impacted their share price. Tesla stock has gone insane in the last few days, as high as $880 per share in after hour trading and to as low as $680 as of today, May the 1st. It's been absolutely incredible due to a few tweets, due to the profit they made in the first quarter and a host of other things. So hope you guys do enjoy today's video. Make sure to drop a like and drop a comment on any of your future stocks you want us to take a look at. Let's get straight into the numbers. So as you can see, a $1.8 billion increase in cash or cash equivalents to $8.1 billion cash on hand, which is absolutely extraordinary considering the global economic headwinds. I did not see them posting a profit. I don't think anyone did. Hardly any analysts expected a profit, even as slim as it was, $16 million. It is a very important benchmark for a company. They have never had an annual profit, and this might be the year where they can turn that around, but they definitely need it going into Q2. They definitely need some momentum on their side as well. As you can see, a negative $895 million free cash flow. Q1 2020 was the first positive GAAP or GAAP net income quarter. GAAP or GAAP meaning generally accepted accounting principles, which just means they did make the profit of $16 million, which of course is great for the company. It's definitely the best quarter for production and deliveries, which is very, very important. Considering Q1 is a seasonally weak quarter for the automotive industry in general, to have their best quarter for both production and deliveries, it really did blow my mind reading this report. I didn't expect it in the slightest. As we go down to the profitability section, you can see a $283 million GAAP operating income with also 4.7% operating margin. A $16 million GAAP net profit, net income, same thing. Gross margin at Shanghai's approaching level of US made Model 3, which is just extraordinary for the company. The gross margin on their Shanghai production is approaching obviously the level of the US made Model 3, which is going to have seriously impact. It's going to seriously amplify their profits in the future, of course, as Shanghai continues to ramp up production. They now claim that they can make 3,000 cars per week in Shanghai as they've been upgrading their factory. Model Y gross margin positive in Q1. They've just started producing the Model Y, and we're going to see serious deliveries in Q2 and Q3 as Europe begins to purchase this car, because I do think it's going to have an incredibly good performance in Europe. I think the design of the crossover utility vehicle will really benefit Europe in general, and I think it's going to have a serious impact on their revenue in the future, considering their revenue for 2019 was only $24.5 billion. The year before, in 2018, it was $21 billion. And the year before that, it was $11 billion. So they're really starting to scale up the revenue. And Cybertruck, of course, has hundreds of thousands of orders, which is estimated at least $25 billion in revenue once all those go through. I see that as sort of a deferred payment, which is definitely going to have a huge impact on future years' revenue. If we go into the production side of things, we can see Model S and X production was 15,390 units for Q1, a year-over-year increase of 9%. Model 3 and Y production was 87,282, a 39% increase, which of course means the total production was 102,672 units, a 33% increase year over year, which is just insane. 33% increase compared to Q1 of 2019. The total deliveries was 88,496, a 40% increase year over year, which is just extraordinary. Due to the cyclical nature of the automotive industry, I did expect Tesla to underperform in Q1. They shocked me, they shocked Wall Street with a $16 million profit, $8.1 billion cash on hand, and a $5.985 billion revenue stream, which is just absolutely absurd. I did not expect that at all. The stock got sent soaring to the $880 per share range. That's recently came down due to a few unusual circumstances that we'll get into later. I'm sure you'll want to stick around for that. But I was really surprised that they did post a profit, and they've never had a profitable year, so that is very reassuring for shareholders. And it's definitely amplified the returns that I think are possible by investing now, and that's why I am personally investing. As you can see, the introduction, it is difficult to predict how quickly vehicle manufacturing and its global supply chain will return to prior levels. We will again revisit our 2020 guidance in our Q2 update. That's very important that they're not announcing guidance now, because I doubt they'll hit it if they do. So that's a very sensible decision. Under volume, we have the capacity installed to exceed 500,000 vehicle deliveries this year despite announced production interruptions. This is very reassuring for shareholders to know that they do have the capacity installed. Under cash flow, we are continuing to significantly invest in our product roadmap and long-term capacity expansion plans as we have sufficient liquidity. Model Y production line in Shanghai and Berlin remain our most important near-term projects. This is very reassuring for a shareholder to know that they're telling exactly what they have as their near-term projects. Berlin is very important. They need to get that up and running. They need to reopen Fremont as quickly as possible. And of course the Shanghai upgrades are going to amplify the amount of deliveries they can make and amount of cars they can produce. Of course they need to find a place and an area to produce the Cybertruck, as they have a lot of pre-orders, and I think that will be their next project after the Berlin factory. It's important to note that the Shanghai Gigafactory has become instrumental to Tesla's operations. The Model Y deliveries began significantly ahead of schedule. They increased the Model S range to 391 miles with no increase in battery capacity, and they plan to get that tested again, and they think it will be 400 mile range. They reached production of 1,000 solar roofs in a week, which is of course another mind-blowing statistic, as of course the revenue was close to 6 billion for the quarter, which was unexpected. I think the analyst expectation was 5.7 billion, so they exceeded that, and of course the profit was unexpected. I'm still going on about it. It really did blow my mind, and I do think they'll make the annual profit this year. It's going to take a lot, considering Q2 is going to be very, very difficult to get through, but I think they will do it, and I don't think it'll be as bad as expected. Now we're going to some key metrics. So as you can see, the key metrics are for the trailing 12 months, which of course is the trailing 12 months. 400,000 deliveries, approximately. They also have positive free cash flow. If you look at the growth there in the middle graph, they've gone from negative in both operating cash flow and free cash flow, and they now are in positive for the trailing 12 months. They also have a decreasing net loss. As you can see, the net loss is almost at break-even point if you look at Q1 for 2020. Due to that profit and due to obviously not making a loss to add and exacerbate the previous loss. So they were making heavy losses, as you can see, just several quarters ago, and obviously they're getting very, very close to making a net profit, and that net income I'm sure will soar in future years as they continue to increase their margins and become more productive, and also produce more vehicles. The Roadster still isn't out, the semi-truck and the Cybertruck are all waiting to be produced, and once we exit this global health crisis, we'll be in much better position, and I think Tesla will continue to grow at 30, 40 and maybe even 50% growth rates every single year. I think the Model Y is probably one of the most underrated factors of Tesla's growth. I do think it's the most important car they've created so far. Before I thought it was the Model 3, but I do think the Model Y is going to outperform the Model 3 in terms of units sold. Once it gets launched in Europe, and once Europe becomes in love with the car, which I think it will. I really do love the slick design of the car, as you can see on the screen right now. And yeah, let's get straight into another point. What the hell is this? What is this garbage? This tweet came out today, as you can see, 4 PM Irish time. Twitter for iPhone. Tesla stock price is too high in my opinion. And who tweets it? Of course he did. What on earth is he thinking? I haven't a clue. Tesla stock just plummeted from about 765. I walked out of my room, went downstairs, came back up. It was on 725. I then called a friend. It was on 707, and I went as low as 680. It is absolutely outrageous. I haven't a clue what he's doing. He really is insane. But as you can see, the Gigafactory Shanghai, right there, the battery module and pack factory. It's a beautiful, beautiful thing to look at, as you can see. And of course, they're going to be producing plenty of batteries at their Gigafactory in Shanghai. As I said, Shanghai Gigafactory is instrumental to their growth, and I do think it's going to be a pillar of Tesla in the future. And that tweet really did annoy me today. I was like, what on earth is he doing? But I took advantage of the cheaper price, of course, but I do think it is a bit outrageous. And some of the other tweets, you should really search them up. But thank you guys for watching. Hopefully you guys did enjoy, and I'll see you guys in future videos.